You have a choice to make right now. Would you take 100 grand right now or this one penny? Now, this isn't just any penny. This penny will double every day for 30 days. So which would you choose? The one penny, or would you take the 100 grand right now? You choose. Let me know in the comments down below. Now let's go ahead and run this math. You don't even have to think this through. I'm gonna do the math for you. So if we take this one penny and we double it, say today to tomorrow, what are we gonna have? We are gonna have 2 pennies. So if we continue this math for 30 days, start with our day 1 at 1 penny and we double that for day 2 to 2 pennies. If we do that again, we're gonna have 4 pennies. And on day 4, we're gonna have 4 pennies. Multiply that by 2, that is going to be 8 pennies. Then we're finally gonna move to day 5, and that is gonna be 16 pennies. 16 pennies after 5 days doesn't seem like a whole lot, but what does this look like if we go from day 5 all the way to day 30. Let's speed up this math. So if we go back to our day 1, we have 1 penny. Going to our day 5, we have 16 pennies. Now, if we continue on this path of doubling our money every day, on day 10, we had $5.12. Go to day 15, and we have $163.84. Now, there's not a whole lot you can do with $163.84, but when we're going down to day 20, we have $5,242.88. We're finally getting somewhere. Now, if we go to day 25, but before we do, let me know in the comments down below, how much do you think we're gonna have on day 25? Take a second, and here we go. Day 25, we have $167,772.16. That means we have more than our original 100 grand. That was the offer. Take the penny, pass up on the 100 grand, the magic penny that continuously doubles for 30 days. Now, if we continue and go to day 29, we have $2,684,354.56. Not a bad sum of money, but one more day and we're gonna double that amount, and that means we're gonna end with $5,368,709.12, all from the power of compounding from 1 penny that doubles every day for 30 days. Now, I know what you're thinking. That's unrealistic. Of course it is. There is no investment that's gonna give you 100% rate of return each and every single day for 30 years, but this is the power of compounding. Now, to put this in more of a real world example, let's say that you had invested $10,000 over a 30-year period in the S&P 500. So we're going to use some historical numbers here. And if we look at that $10,000 would grow to over $206,000. What this means is that $1 spent today could have been worth $200 in 30 years. Now, again, past performance is not a guarantee of future returns, but if we look at the S&P 500 and are applying these concepts, that $1 today that you're spending could be worth somewhere around $200 30 years from now. Now, this doesn't mean that you should save every single penny and stuff everything into the bank or put it into an investment, the S&P 500, but what it does mean is to be smarter with your money. But most importantly, whether or not you could save a little or a lot, saving early and saving often is the key to financial independence and getting to your financial goals, whether it be retirement, financial independence, whatever you want to call it. Now, again, I have to say this, past performance is not a guarantee of future returns. Investing in the stock market could be risky. You could potentially lose money, but understanding what the power of compounding can do for your financial future could really help you reach your financial goals and get over those hurdles and start to save today. So again, it doesn't matter if you could save a little or a lot. It's about saving early and saving often. I hope you've enjoyed this quick explanation of investing and compound interest. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.